Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you very much for joining me. Well, yesterday the Australian dollar returned to the bearish path after initially taking the re-challenge back to the top side of around 71 cents. From the backing down is the fact that the market posted an intraday high of 71.05 before the bears retaliated and eventually posted another negative close. I do believe the market is still poised for another test to the downside, with the target remaining at 70.40.45, with this year's target still holding at 69.40.60. Any advances, I do expect to see the market fail again, with the 71 handle still serving as a short-term resistance, with further supply around the 60-day moving average around 30 and also above the 71.50.65. So as you can see, there is a lot of supply on the top side of the range, and I do believe the market will eventually break down and reach its objectives, but a little bit more confirmation from the technicals would be supportive enough to at least see a challenge of 70.40.45. The euro is getting closer to its objective, which is at 111.60.80 after crushing the level of 112.60 prior this week. The market at this stage could see profit taking towards 111.60.80 because the dollar index is getting a little bit to the top side of the range, although it did rally 0.5% and posted a high of 96.83 and closed in New York at 96.80. Data released overnight showed a softer than expected German flash CPI numbers that marginally softened the euro. Also, the final US GDP figures missed its expectations or forecast at 2.4 and came in lower at 2.2. Previous was 2.6. It is assessed that the US economic numbers are continuing to point to a deceleration in growth in the US. On trade talks, they kick off today with in Beijing, that is. And let's see what can come out of the talks. There is some view that we could see an extension in the talks, but further confirmation still needs to be required on this. For the range though, I do expect to see 112.95.10 to possibly serve as a short-term cap for the euro. As I mentioned, target's 111.60.80 and could see profit taken there. Well, the market once again struggles to the top side after taking a stab quite close to the resistance in dollar yen at 110.82, but locked in a range and a whipsawed one of 110.01 to 110.82, and now from the decline from the resistance of 110.95.05 could see a little bit more weakness into today. I still hold the view the market can drop down towards the region of 109.95 to 109.55 and reassess from there. The pound is a little bit weaker overnight as we finally come to the deadline, which was March the 29th. And yes, the Brexit chess game has now come to a standstill after the UK Parliament did seize the control of the Brexit process from the government in an unprecedented move amid at an ending the deadlock. So let's see what happens today on the vote. And see the market, no doubt, will continue its roller coaster ride and playing it in a very volatile session. But from a technical point, the two indicators have married up. So therefore, we could see further pressure on 129.50. A break beneath there would give scope down towards 128.20 to 127.50. Well, to some disappointment, the market overnight for gold clearly crushed through a lot of supports and failing to hold at 1,300 and posted a fresh low of around 1,290. It now exposed in the region of 1,280.82. I do expect to see the market recover from these levels, but it really depends now on the close of New York. If we see a close under 96 in New York tonight or tomorrow morning, this may give some concern of another bearish attack towards the region of 1,288 with a base seen at 1,280 to 82. But let's see where the close is to assess further in terms of a trade. And wrapping up with oil, well, no surprise, Donald Trump come back and tweeted on oil prices being too high. It was the second tweet for this year from Mr. Trump, or President, after saying that prices are getting too high. Well, his tweet actually said, very important that OPEC increases the flow of oil. World markets are fragile. The price of oil is getting too high. Thank you. It was back in February 25th that he was saying not to push the markets up too much. With the supplies cuts, prices are getting too high. Trump then said, OPEC, please relax and take it easy. The world cannot take a price hike. Fragile. Well, the market rejecting off the level of 58.5 does give some comfort that the bulls are still down there and around $57 also. If this market can continue, and may do from a technical point, then the target is $61 and maybe above there to 64. I still am a buyer on dips if we do see it fall towards 58.5 to 57. Well, that wraps up for today. Thank you very much for joining me. As always, look out for the intraday report. I hope you enjoyed this brand new day and a great start to the new weekend.